This is Boxes and Briefs, a podcast with real-life business stories. But we will be asking the hard questions and challenging traditions. So broaden your thinking with fresh perspectives and solve problems for business success. Welcome to Boxes and Briefs. My name is Lisa.
I'm Kelly.
And today on this episode, we have with us Cam.
Morena.
So Cam is a mortgage advisor. Don't stop listening. He is someone who's owned a rental property for a decade, so he knows the numbers, can speak from experience, and we're trying to figure out as business owners the whole mortgage game. There's all kinds of questions that pop up on the regular, so we wanted to grill you about it.
Okay. Grill away.
Our first, I just want to know, what makes you different from other mortgage brokers? Are you all the same?
What makes us different from other mortgage brokers? I don't know what makes us different, but I can hazard a guess at what makes us good.
Okay.
Right? If you were to look at all of the Google reviews that we've got, you'll see there's a common theme that runs through all of them, and it's the communication piece. I had a client come in maybe last Monday, I think it was. And as it happened, her brother-in-law was going through the mortgage process and buying a house himself at exactly the same time with another mortgage guy. And she said to me, Cam, the experience that we've had versus what the brother-in-law has had is like night and day.
Wow.
She said to me, this was our last meeting that we needed to have. And she said, we have had 4 meetings in person for this one and a couple of 3 other Zoom meetings. We have had a whole heap of email. We have had numerous phone calls. You've handheld us all the way through the process. We know exactly what we're doing and why.
Yeah.
Contrast that to the brother-in-law's experience, which was fill in a form, provide us some stuff, here's an approval, over to you. Right? So we told them why we were doing it, their mortgage approval in a certain way with a certain bank.
Yes.
Then we helped them purchase the house, and then we were just wrapping it up. So they knew all the way through, like I said, why they were doing what we were telling them to. Brother-in-law completely in the dark. Okay?
Yeah.
So it's the communication piece. That's number one. The second piece, I think, is the analysis that we do. It enables us to really drill down. Well, we do the drilling down. We do the drilling. We do the drilling down. We literally line by line people's bank statements.
Oh,
we categorise it.
That's exposing.
It is, but it's empowering.
Okay.
We tell them why we're doing certain things in a certain way because we have the analysis to back it up. And then, having done that, here are the levers you can pull to change your outcome. Okay?
Right, so you can start doing preparation a long time before you actually need the loan.
Absolutely. And then that leads us to the advice piece. So the communication, the analysis ends up with good advice.
Yep.
And then you turn it into a Google review and they all look fantastic.
Well, the other one that's interesting is your approval percentage rate. That one. So I know that there's an average for other brokers and then there's your standard. Can you tell me what those numbers are?
Yeah, so I don't know what the average is for other brokers.
Okay.
But the standard that the bank really wants you to hit is somewhere between 60 and 70%. And that's an approval ratio. So for every application submitted, the bank wants to see 60 to 70% of those applications approved. If they're not approved, they're wasting their time assessing them. It's a quality measure, right?
Okay.
Our approval ratio is 90, 95%.
Ooh.
So what that tells you is that if we can't get the loan approved, no one can.
Yeah. That's really good.
Yeah, it is.
Congratulations.
Thank you. Yeah, I'm proud of that. And the girls, my team of 4, the 4 girls, they are the engine room, really.
Yeah.
I just deliver the news, good and bad. But they are actually doing the analysis, and then I bring it together into a format that makes sense for people. They kind of do that too, because, I mean, they know what's right and what's wrong and what's going to look good and what's going to look right and what's going to work for a customer. But yeah, that analysis is really what enables us to deliver that approval ratio.
Yeah.
So I don't know if that makes us any different, but it does make us pretty good, I think, at what we do.
I think so.
Yeah.
Yep. I'd agree with that. I concur.
Yeah, thank you. Good.
Yeah. Okay, so we want to talk about business owners. Every journey a business owner has been to become a business owner could be from scratch, start up putting their own money in. They could have had investors. They could be buying an existing business. They could have turned their job as a self-employed person into their own business. All a different journey.
Mm-hmm.
At some point, when they want to start looking at purchasing property, they don't know what to do or how to do it. They haven't got a regular salary that they can present so that they can be approved for a loan. So what are the common challenges and how can they overcome that, trying to own their own property?
Yeah, great question. The interesting thing about getting a loan approval for someone who's self-employed is that mostly they've got to be prepared, and they've got to be prepared early. The thing that they've got to do the most preparation on is their financial accounts. Right? Because the hard thing, like you were alluding to just there, for a business owner to prove is their income.
Yes.
And business income does wobble around from week to week or month to month, certainly, and year to year.
Yes.
So the thing that the bank is looking for is consistency of that trading history, producing a certain level of income that supports a loan of any given amount.
Yeah.
Yep.
And so to be able to prove that, you need to have your financial accounting done. It needs to be up to date for the financial year that's just finished.
Yep.
And then if you've got interim accounts from the 1st of April through to today, for example, that's fantastic because it helps support whatever story you're trying to, or I'm trying to paint.
Yes.
So you need those financial records in place, your financial accounts in place, and there's really no excuse to not have them in place these days. Things like Xero, MYOB, and there are others that are new and interesting. Henry, for example, that sort of stuff. In New Zealand, I think Xero is the big one. There's no excuse to not have that information to hand.
Yeah.
There's no excuse to not have that information current, like the last month. Or even the last quarter, certainly the last financial year.
Yeah.
Yeah.
Right? So if you've got all that information, it's far easier for the bank to essentially see what you're doing and get comfort around the level of income that you are saying you've got
Yes.
Yeah.
to be able to demonstrate you can afford the loan at
Yes.
whatever level you want.
So I know that, like, in business, in the beginning, you kind of do want to write off everything that you can so that you pay less tax. So when you're trying to go for property, is that the same game?
Yeah, absolutely. So your accountant should still be doing his or her thing in terms of minimising your tax bill, and that's writing stuff off. When I look at a set of financial accounts, I start at the bottom, literally the bottom line, and then we start adding things back. We start going back up the page, right? So we're adding back depreciation, for example. We may be adding back interest. We may be adding back, we'll certainly be adding back the shareholder or director's salaries, right? So you might start in a position where you've got a net profit of, and when I say net profit, I mean after tax, before tax. You might start with, $50,000, which is not enough to be able to borrow a big enough mortgage to buy something in Auckland. It's just not.
Yeah.
But there may be a handful of things above that line that we can add back that turns that $50,000 income into $100,000 income. And actually, the business owner knows that they are earning $100,000.
Yep.
Yep.
They've just written half of it off
Yep.
legitimately.
Okay.
So we start at the bottom line, work our way back up. That's the long story short. And that's how we get to the position of a particular level of income. The other thing to think about is that the bank wants to see 2 years of trading history,
Right.
because that irons out the lumps and the bumps, right? They get an average. They can see that you are trading, that the business is solid enough to go for at least a couple of years.
Yep.
More
Yeah.
is better. But that's sort of your minimum policy starting point.
Have you got any tips or tricks around the lumps and bumps? Like, if your income is irregular, is there anything that we can do to try and make it look better for banks?
In terms of the numbers, no. In terms of the story, yes. So the bank's got to understand why the lumps and bumps are there.
Right. So some will have a bump at Christmas and some will have a dip.
Absolutely right.
And it's just going to be the type of industry that you're in, so it will be how you explain that in the application.
Yeah, dead right. Okay. And so this goes to why the bank is wanting a couple of years' worth of trading history, because that irons out those lumps and the bumps. You don't see the month-by-month variation in an annual set of accounts. You just see the performance for the year and then the next year. You'll see the lumps and the bumps in that interim report. And that's actually really good because it helps the bank understand your cash flow, and it helps the bank understand if you are managing it or not, as the case may be. Hopefully you are.
Yeah.
So from an accounting perspective, you shouldn't do anything different. You should just record it accurately, but then you should tell the story as to why things look the way they do.
Yeah.
An answer to that, I suppose, something that a business person can actually do to assist with that process is have a business plan. Right? Because that provides the story behind the numbers.
Yeah, if you've got to invest in something so that you can be bigger the following year, all that kind of thing.
Yep. The bank will take it into account. They might not necessarily support it, but it'll help them understand why you're doing what you're doing, help them understand why you're behaving as you are.
Yeah.
And that's always good.
Okay.
Yeah.
So with a lot of startups going into business for yourself, often you won't pay yourself a salary, right? So you'll just pay for things as you need it from the business account, and then it'll get marked as drawings.
Yep.
But I've kind of heard that should be separated. You should have a business one and you should have a personal account.
Yeah, let's just touch on the business versus personal account thing in a second, but the drawings thing, I think I know why people do it. I know why accountants suggest you do it, and it's because drawings are a reduction in capital of the business. They are not actually income, right? So drawings aren't taxed in the same way. So therefore the bank doesn't see it as income per se. They can see it as money landing in your bank account, but it's not taxable income.
Right.
It's not. Drawings is a reduction in the capital of your business, right? It's something that reduces the balance sheet, whereas the bank is really interested in what's happening on the profit and loss from a income earning perspective.
Well explained.
Yeah. So there's that. It's not to say that drawings is a mistake. It's another way of constructing it, but it's not, strictly speaking, it's not income either. So you just need to be careful about that. And the way to explain that is to make sure you understand why that is happening and how that's working through from an operating performance perspective on your P&L.
Yes.
The other question about separating your finances, business versus personal, absolutely you should do that. Definitely.
Why?
Definitely. It's transparency. So you can see what is a business expense, because that's running through the business, and what is a personal expense, and that's just running through your standard bank account.
Okay.
Right? The reason that you do it is because if you're trying to prove to the lender what your business performance and capability is, well, you can't have your personal stuff muddled up in that, because that's yours.
Yeah.
That's your da-do-da-do, so to speak. It doesn't belong to the business.
Yeah.
You might be the business. You might be a one-man band, one-woman band. But you do have to separate it out so that the bank can clearly see how the business is operating, because that's the thing that generates the income that you have. The income you have is what you've got to pay the mortgage.
Yep.
So you just got to understand that separation is really important. It's as easy as having separate bank accounts. It's literally as easy as that. Keep it simple, man. It's like, it is not difficult.
Okay.
Yeah.
Got it.
Boxes and Briefs is proudly brought to you by Gilligan Shepherd, the problem solvers in business.
All right, Cam.
Yeah.
When is the right time to buy property?
You said you knew the answer to that question before you asked it.
I do. You always say it. You say yesterday.
Yesterday is always the best time to buy property.
So it's not a matter of what the market's doing, when interest rates are high or low, when the market's flooded with options.
Nope.
It's just do it.
There are better times to buy property than others. The trouble with that is that you will never know if now is a better time than any other time, because you only understand the answer to that question in retrospect. So it's not really worth thinking or trying to think about when is a great time to buy property. It's much better to approach the question by saying, what is it that I want to achieve by buying a rental property, or 3 or 4 or commercial, or maybe a mix of all of those things? What are my goals? What's my position? And how do I bridge the two?
Yep.
That's really what it's about.
Because all of the numbers are the details.
Well, the numbers are what's going to inform what your capability is.
Yeah.
And in any market, there are opportunities staring you in the face. In every single market, whether it's going up, down or sideways, there are always opportunities. It's absolutely true that property was cheaper yesterday, as in literally yesterday,
Yeah.
in the current market for sure, but certainly 10 years ago, 20 years ago, it was cheaper. And if you had been able to buy it then, you'd now be very rich.
Yep.
Right? So yesterday in that sense is always better. But because you don't know if you've got your timing really good right now, actually all you're left with is what you want to achieve and your current capacity. And it's your job to bridge those two. And you can get some advice around how to do that from someone like me who's going to maybe help you figure out what your borrowing capacity looks like. And that will inform whether you can buy something now or you have to wait because you need to just some things in your financial picture need to change.
Yep.
Or if you can buy 4 of these damn things right now.
Oh.
Some people are totally capable of it. They just don't know. So it's a matter, as I say, of marrying those two things together.
Yeah.
And the sooner you do that, the better.
Yeah.
If property is something that you're interested in doing. Yeah, I think the other thing you've got to remember here is that property is not the only thing or asset that you can get involved in that will go up in value, that will create wealth for you. It's not the only option. For some people, it's...
Did a mortgage broker just say that?
Yeah. I know, right? Yeah, no. For some people, it is absolutely the wrong thing for them to do, right? And that really runs against the Kiwi culture and ethos of buying property.
Yep. White picket fence, 2 kids and a dog.
Then get a rental.
Yep.
Then get another one.
Maybe a holiday home.
Yeah, that's right. And then
Yep.
when you're sort of 25, 30 years down the track, sell 2, keep 2, freehold, something like that.
Yep.
Right? For some people, it's too much to manage. For some people, they just can't borrow that much money. For others, they don't like the risk associated with rental property. Believe it or not, there's some risk involved, and that's mostly to do with leverage, the borrowed money part. The other risk that property presents that other investments maybe don't is liquidity. So if you need to offload an asset because you've got a cash flow problem and you need, there's a cash flow hole you need to fill, it's very hard to sell a property. It's very hard to get, say, $100,000 out of a property and keep the property. You either borrow the money, and if you're in the poo-poo, you may not be able to do that. So you've got to sell the whole thing. Whereas if you've got a share portfolio, you just sell a bit of it, right? With a house, you can't sell the lounge to pay off your debt, and it doesn't work like that.
It's true.
It's a lumpy investment. It lacks liquidity. So it's not always the right thing for people to get involved with. But if you are going to, then yes, yesterday is a good time to do it, so long as you know what your numbers are and what your targets look like.
Yeah.
Yeah.
We also mentioned different mindset between business owners and employees. What's that about?
Generally speaking, business owners are people who will take a risk. That's why they're in business.
Yeah.
They tend to they're more likely to have a growth mindset. Again, they see an opportunity to serve a particular niche in the market, so they start a business around that. Getting involved with rental property is the same thing. And from a mindset perspective, you can see that there's an opportunity to create wealth by providing rental accommodation. That's what it boils down to. And you've got to have you've got to be willing to take a punt. And with property, it's a rather large punt.
Yeah.
It's a $500,000 punt, sort of minimum. Right? Right. The punt is actually bigger than that because most people want to take that punt with someone else's money, the banks, not theirs.
Yeah.
So it just ups the ante. So the mindset tends to be different for people who want to get involved with it. That's not to say people who are employees don't get involved with rental property. Plenty of them do.
Yeah.
What I'm saying is that the mindset of someone who's in business is more aligned to the risk-taking that is required for a property purchase.
Yeah.
Okay, so what would you say to someone who is an employee? Because for someone like me, the idea of buying a property or rental property, it's incredibly daunting because it feels like an impossible task at this point. What would you say to someone who maybe is feeling like that to kind of just help them sort of meld the mindset of this is possible for you potentially?
It's the same thing that I would say to someone who's looking to buy a property just to live in, who's feeling like it's a daunting kind of a thing, and that is to find out what your capability is, how much you can borrow, what the repayments look like.
I definitely grew up with there's a particular percentage of deposit that you need that was always bandied about.
Yep.
But even that number has changed a lot over the years.
Yeah,
as to
that's
what
right.
can and can't be done.
Yeah. And I think irrespective of what you think can and can't be done, you should come and talk to someone like myself and literally find out. You might be right. You probably will be. But you might be quite wrong too. I've had people come to me and they've sort of been meek and mild, if you like, thinking about the rental property idea. And I look at their numbers and I go, why haven't you done this 10 years ago? You have so much horsepower, it's not funny. So let's start you off sort of, well, not slowly, a little bit quicker than slowly. And the point of me telling you that is that you don't know what you don't know, so you should find out. That is the starting point, Kelly. Yeah.
So you're open to those conversations where maybe they're not quite ready yet, but they want to find out how close they are?
Yeah, absolutely. Yeah.
It's a good starting point because you can also start getting your bank affairs in order for what is going to want to be seen by the banks.
For sure. And like we were saying before, in terms of getting yourself, what should business owners do to get themselves prepared? Get your financial accounts in order. Make sure they're up to date. That's a key part of it. And then we can crunch those numbers, really, well, not easily, but, well, it is easy actually. Yeah.
Excellent.
Cool.
All right. Do you have any final piece of advice to say to anybody trying to get into the property game, especially as a business owner?
Yes, I do. I would say start early. Knock on the door early. Don't ring us up 2 days after you've seen the property. you need to have gotten yourself into a position where you're asking those questions 3, maybe 6 months prior to you actually doing it.
Okay. Yep.
So and so we can iron out any wrinkles that may be there, because it's interesting, man, with whether you're buying rental property or owner-occupied property, when you want to go, you want to go.
Yeah.
When the real estate agent has got an agreement out of you, it's time to rock and roll.
Yeah.
So you want to make sure you are totally prepped, because if you're not, I mean, the process is stressful enough as it is.
Yeah.
But if you're prepped and ready, and you know what you're doing and why you're doing it, there's still a process to go through, but it's relatively smooth. Probably the biggest thing you'll be doing is waiting. If you're prepped, you're like, oh God, this is taking forever.
Yeah.
It's just how it is.
Then you're ready and excited to go anyway.
Yeah, that's right. So get prepped, do it early.
Okay.
Yeah.
So how can our listeners get in touch with you?
Easy, they can Google us, right? So,
what do they Google? Cam?
Yeah, they can type in Campbell Hastie, that's fine. Or they can go hastiemortgages.co.nz.
Excellent.
Easy.
Cool. Thank you so much for your time. It's been a pleasure.
Cool, no worries.
Boxes and Briefs is proudly brought to you by Gilligan Shepherd, the problem solvers in business.